It's kind of both. Happy New Year to you, Mike. And I agree with the statement that you made earlier that only about 20% of the S&P actually outperformed. That means roughly 80% matched or underperformed. So that's where the real value is. The economy is doing well. Earnings are rising and rising at a pretty good clip. So if companies have really not participated, that's where you can find value.
Would you consider the big banks not to have fully participated? I mean, they actually have been on a pretty good relative performance run, and it feels as if the bull case in terms of regulatory relief and a pretty decent economy is pretty well acknowledged.
Yeah, that's right. But keep in mind that last year they got decimated by the Silicon Valley fallout. All the banks got slaughtered. They have come back very nicely in the last several months. They're nowhere near those lows. But they still represent outstanding value. They're all trading at a relatively moderate, or in some cases modest, price to book, price to earnings. And they do have good prospects with the economy doing well. And then on top of that, you have the additional thoughts that the government will be more likely to allow M&A to take place. There'll be more IPOs, more capital markets activities that'll help the big banks in particular. And then the regulatory environment will be more favorable. So there are a lot of reasons to think the banks should do well.
From a macro standpoint, you think immigration and tariffs will be the most important aspects for early 2025. How are you handicapping those two policies and the potential impact to jumpstart inflation?
Yeah, those are critical issues in my mind, Leslie. So there's no doubt that Trump's promises may not all happen, but certainly he's going to push on a number of fronts. So for sure, I would bet that the wall or the border is closed much more effectively. That means the flow of illegal immigrants into the United States is going to be greatly reduced. And they were critical to the growth of the economy. People don't really appreciate that. It would not have been possible for the economy to grow as rapidly as it did over the last couple of years if those people had not come in and been available to work. So firms will not be able to hire at the pace that they did in the last couple of years. That inherently means slower economic growth. But it also means more labor scarcity. And so we'll see more upward pressure on labor costs, which means more pressure on inflation. And then you throw into that mix the question about tariffs. So again, Trump may be posturing. It's not likely he's going to implement all of what he threatened. Some of that may be just to create bargaining chips. But I would certainly bet that tariffs do go up to some degree. We just don't know how much. And if tariffs go up, that means prices go up and inflation goes up.
Chuck, coming back to sort of value, your focus on it, obviously it can be somewhat easy to find stocks that are undervalued or represent value, but it doesn't mean they're going to go up. It's another year where growth is outperforming value. What gives you the confidence that at some point you're going to want to own value at the end of the year because it actually did better?
Well, one of the nice things about owning some value stocks is that they provide pretty good yields. So you're paid to wait. I don't need these companies to go up next week, next month, first quarter. I have a longer-term perspective. We're investors, not traders. And so we're looking for good value over the long term. And if we're in good companies and the companies are doing well, sooner or later, the stocks will follow suit.